23rd, 2025. And welcome everyone to the 45th edition of FinWell Daily Brief.
45 already. It really has flown by.
It really has. And speaking of shifts, we've got a financial fact today that's, well, pretty striking.
Oh, go on.
Over half, think about that, over 50% of Indian households are now investing in financial assets. We're talking mutual funds, equities, FDs.
That is significant. A real move from, say, just gold or property.
Exactly. Less reliance on the traditional stuff and more towards, diversified portfolios. It feels like a big step. What's behind that, do you think?
Well, it's likely a mix of things, wouldn't you say? Definitely more financial awareness out there.
Right. People understanding more.
And technology, of course, making it so much easier to access these markets. Plus, maybe a growing sense that, well, there's real potential for wealth creation here.
It's a very positive trend for the whole financial scene, I think.
Agreed. Very encouraging.
Okay, so keeping that pulse, let's jump right into today's market numbers. Closing bell at 3:30 p.m. IST.
How did we finish up?
Strong finish. Nifty 50 closed at 24,849.05. That's up 239 points. Almost a full percent gain, 0.97%.
Wow. Okay. Solid day.
And the broader market.
Right there with it. The Nifty Midcap 150, it closed at 20,863.50, up about 110 points, so 0.53%.
Decent.
And the Small Cap 250, also positive, closed at 16,532.95. That's up 96 points, 0.59%.
So good participation across the board then.
Seems like it. Even the Nifty Total Market Index saw a nice jump, up 0.82%, closing at 12,816.80. So yeah, overall, a really positive close for Indian equities today.
It certainly signals some strong underlying confidence, wouldn't you say? Broad gains like that suggest widespread interest.
Definitely feels that way. Now, away from equities for just a second. The 10-year bond yield.
Where did that land? Still watching that closely.
Held steady, 6.32%, like a rock almost.
Stability there is always welcome. Good for borrowing costs, general predictability.
And the rupee, still holding its own.
Let's see.
Trading at 85.40 per US dollar. Pretty resilient, especially with everything going on globally. Indeed. A stable currency helps manage import costs, inflation. It adds to that whole picture of macroeconomic stability.
Okay, so what were the big stories pushing the market today? It really felt like consumer goods and tech were leading the charge.
Ah, the FMCG space.
Yeah. The Nifty FMCG index surged 1.7%.
Yeah.
Companies like Varun Beverages, ITC, Tata Consumer, the things people buy day in, day out.
That suggests healthy consumer spending, doesn't it? Confidence on the ground level.
It feels like it. And then you had IT stocks also putting in a strong performance. It's like those twin engines, consumption and tech, were really firing.
Well, the IT sector strength certainly highlights India's ongoing role as a, global tech player, still attracting investment, strong exports.
Makes sense. Now, earnings season always gives us some drama, right? Bit of the mixed bag in pharma.
Oh, what happened there?
Well, Sun Pharma's Q4 results, apparently they didn't quite hit the mark. Stock fell almost 3%.
Disappointing for them.
But then look at MCure Pharma. Totally different story. Net profit jumped, wait for it, 62% year on year.
62%. That's huge.
Tell me about it. The stock hit the 10% upper circuit, maxed out for the day.
Wow. Just goes to show, even within a sector, individual company performance can be poles apart. Importance of fundamentals right there.
Absolutely. Digging deeper than just the sector trend.
Yeah.
And people were also watching Grasim and JSW Steel's earnings closely, too. Big industrial names.
Bellwethers, yeah. Always important to track. So the MCure story really highlights specific company strengths paying off.
Definitely. Okay, shifting gears. Electric vehicles, still a hot topic.
What's the latest? Ola Electric.
Bingo. Their board approved a big fundraise, 1,700 crore.
That's a serious chunk of change. Investor confidence still high then.
Seems so. The shares jumped over 7% on the news. It's like, the market is really betting on the future of EVs in India.
Well, it signals that investors see massive growth potential there. Government support, environmental concerns, tech improving. It all feeds into it.
And speaking of big investments, how about the Adani Group?
What are they up to?
Big plans for Assam. A 50,000 crore investment commitment.
50,000 crore, that's enormous.
Huge. And, it created a bit of a positive buzz around some of their stocks, the major signal about infrastructure development.
Absolutely. Large-scale infra projects like that are critical. They create jobs, boost connectivity, drive demand for steel, cement, you name it. Big potential impact for Assam and the national picture.
Right. And finally, just a quick look at the IPO and SME scene. Still buzzing.
Always seems to be something happening there.
Well, Bellrise Industries' recent IPO was oversubscribed. Shows there's still appetite for new listings.
Good sign. Means investors are willing to take on risk for potential growth.
And coming up, we've got Victory Electric Vehicles, more EV action, and Neptune Petrochemicals lining up for their IPO subscriptions. So, yeah, still a very active space.
It reflects a healthy environment for emerging companies needing capital to grow and innovate. That oversubscription for Bellrise is a strong vote of confidence.
Okay, so we've covered a lot of ground from today. Let's pull back a bit and look at the week as a whole. How did we wrap things up?
Felt like a strong finish based on today.
It really was. Indian equities closed the week firmly in the green. Both the Nifty 50 and the Sensex were up over 1%. Kind of a positive vibe heading into the weekend.
Yes, a robust close. Shows resilience, especially with, everything happening globally.
Exactly. And that buying we saw in FMCG, IT, and some financials really helped offset the bit of weakness in pharma.
A nice balance, Sam.
And what's really encouraging, I think, is the stability. Bond yield staying put, the rupee holding firm.
Yes, that stability provides a really solid foundation. It helps ease concerns about potential global shocks affecting us too much.
Like a steady hand on the tiller, sort of. And it wasn't just the big guys, was it? Mid and small caps rallied too.
Right. Broad participation, that's usually a healthier sign than just a few heavyweights pulling the index up. Suggests a more sustainable rally, perhaps?
So, looking ahead. Earnings season is mostly done. Expiry volatility is easing off. What should you, our listener, be thinking about?
Well, the focus probably shifts back more strongly to fundamentals, right?
Seems sensible. Focus on those sectors looking solid. FMCG, IT, infrastructure seem to be the consensus picks right now. Areas with good long-term prospects.
But also be cautious. Some sectors might still face margin pressures. It's not a rising tide lifting all boats equally.
Good point. Discernment is key. Focus on quality.
Exactly. A strategic approach. Look for sustainable growth.
And beyond specific stocks or sectors, what are the bigger things to keep an eye on? The macro triggers.
Well, global central banks are always top of the list. What they say, what they do. It has huge ripple effects.
Definitely. And commodity prices.
Crucial. Big impact on input costs for many industries. Watch those trends.
And domestically, any more policy signals from the government?
Always important. Tax changes, reforms, infrastructure spending plans, they all shape the investment landscape here. Those are the main things to watch.
Got it. Okay, now let's switch gears to something really important for protecting your investments. We need to talk about wash trading.
Yes. Something investors absolutely need to be aware of. It's deceptive and illegal.
So what is it exactly? Put simply, it's when someone is basically buying and selling the same stock at the same time.
Seems pointless on the surface, right? But there's a manipulative goal.
Exactly. The idea is to create this artificial buzz to make it look like there's a lot of trading activity, a lot of interest in a stock.
They inflate the trading volume numbers, trying to influence the price, essentially.
Right. They want to trick other investors into thinking, oh, look how much this stock is trading. It must be hot, and get them to jump in.
It's pure manipulation of supply and demand perception, trying to lure people in based on false signals.
And let's be crystal clear. Wash trading is illegal. It undermines the whole point of a fair market. Regulators are actively looking for this stuff.
Market integrity is paramount. This kind of activity distorts prices and harms genuine investors.
So how can you, our listener, spot potential wash trading and avoid getting caught up? What are the red flags?
Well, be really wary of sudden, massive spikes in trading volume for a stock, especially if there's no obvious news or reason for it.
Like volume suddenly jumps 10x with no announcement. That's suspicious.
Exactly. Always do your homework beyond just volume. Look at the company's fundamentals. What's the actual business doing? Is there real news?
Don't just chase the volume number. Verify the legitimacy of the activity.
Prudent advice. Stick to fundamental analysis. Rely on credible information. Be skeptical of hype, especially if it seems to come out of nowhere with unusual trading patterns.
Good advice. Be vigilant. Hey, finding this breakdown helpful. Want these kinds of insights every single day to navigate the markets.
Keeping you informed without drowning you in jargon.
That's the goal. If you want to stay ahead, make smarter financial decisions, and really understand what's moving the markets in India, then you really should subscribe to Finwell Daily Brief.
We bring you the key news, the analysis, the context you need, all in one place. Concise, engaging, just like this.
Don't miss out. Hit that subscribe button wherever you get your podcasts. Make us part of your daily routine.
And we'd love to continue the conversation. Connect with SOS Fin well over on LinkedIn.
Yeah, join the community, share your thoughts, ask questions. We're building something really valuable there. So subscribe to The Brief, connect on LinkedIn. Let's navigate this financial world together. All right, wrapping up today's FinRel Daily Brief. The big takeaway. Indian markets ended the week strong. FMCG and IT were definitely the stars.
And underpinned by that reassuring stability in bond yields and the rupee, suggests solid macroeconomic footing.
A pretty positive picture overall. But, and it's an important but.
Always be vigilant.
Exactly. For you, our listeners, keep focusing on quality stocks, do your research, and stay alert for any manipulative stuff like the wash trading we talked about.
Yeah.
Especially with global uncertainties still around.
Knowledge and awareness really are your best defense in the market. Informed decisions, healthy skepticism.
Couldn't agree more. And on that note, let's end with a great quote from Chris Rock, actually.
Oh, what did he say?
He said, "Wealth is not about having a lot of money. It's about having a lot of options."
Makes you think, doesn't it? Options come from knowledge, from being prepared.
Precisely. Something to reflect on. Thanks for tuning in, everyone. We'll catch you next time on FinWell Daily Brief.